Good afternoon, everyone, and welcome to Stock Market Today. Ali Corum and Ken Shreve here with a breakdown of the action in today's session. And it was another rough day on Wall Street with a lot of heavy selling into the close, Ken.
Yes, indeed. We had the House actually finally pass this government funding bill, but that really didn't provide much help to the market. We had another wave of selling late in the day. I'm trying to remember the last time the NASDAQ has suffered 4 distribution days in a row, higher volume declines, signs of institutional selling that we talked about on yesterday's video. Very weak close for the S&P 500, which also suffered another distribution day. So pretty clear at this point that institutional investors are selling stock. We'll see if the market can firm up here. But this, out of all the pullbacks that we've had in recent months, this one definitely is looks to be the most severe.
That's right. We do want to highlight, however, a couple of stocks today, including Paychex, Billcom, and MongoDB. We will get to those, but first, more perspective on the action in today's session. So here we have a look at the NASDAQ, which finished the day down 0.4%. The S&P 500 down 1.2%, the Dow down 1.6%, and the Russell 2000 down 0.7%. So even the NASDAQ couldn't hold up by the end of the session. So yet another down day in heavy volume here, Ken, as you mentioned.
Yeah, I mean, it's no secret. We often talk about, weak markets. Characteristic is when you open strong and then you just fade late. Conversely, in healthy markets, in the early stages of new bull markets, you might get a weak open followed up by a wave of buying into the close. But you can see over the past 3 sessions, Tuesday, Wednesday, and today, early gains faded badly, and the NASDAQ closed near its session low each day. I mentioned 4 distribution days in a row. You can see that down at the bottom, and we talked about all those big red bars over the past 2 to 3 weeks. This is a market that's under distribution. So with the composite below Monday's low, not this past Monday but the Monday prior, this certainly could bring a trip down to the 14,000 level into play. And you can see the NASDAQ's 200-day moving average is just below that 14,000 level. So it looks like a legitimate support level. That would be, pretty painful if we come all the way down that far. It would be about I think about a 9% pullback off its high, which is the steep. That's a pretty steep pullback. So we'll see if a bottom is put in, soon here, but market is still under a lot of selling pressure.
Yes, we'd have another 4% or so to go to get down to that 200-day line for the NASDAQ. Let's also check in on the S&P 500 to see where it closed for the day. So as we mentioned, the S&P down 1.2% for the day, closing just above that 4,300 level, Ken. And the low on Monday, the 20th, the low there was 4,305. So the S&P closing at 4,307 today.
Yeah, so it's just kind of flirting with a break of that low. I mean, listen, what we know right now, and what we've been talking about on IBD Live, in recent weeks, that the warning signs have been out there for a little while now. So taking defensive measures with your portfolio certainly made sense last week and the week before. There's just a lot of selling going on, particularly in high PE, high multiple growth stocks. Value stocks seem to be coming into favor here. So just got to be careful. Discipline is very important in a market like this. I mean, you're going to see stocks rising in weak markets, but really weak markets eventually take everything down with it. So it's best to probably just sit on your hands at this point and take some profits. Not worry about tax ramifications, but take profits if you have them, and get out of the market's way here and let the selling run its course.
Yeah, live to fight another day. I mean, there's a reason why we want to stay in step with the market. And if you're able to protect yourself in times like these, then you're able to be positioned that much better and that much stronger when we do get a new uptrend. So we will keep an eye out for signs of that. And Paychex is a stock moving on its earnings report in today's session with a gain of over 4%. So a gap up on that quarterly report, some strong numbers on both the top and bottom lines, marking acceleration from the prior quarter as well, but a little bit of resistance, it looks like, at that 50-day line, Ken.
Yeah, with about an hour left in the session, the stock was up near session highs, and it looked like it was going to decisively retake its 50-day moving average. But again, the selling that we saw late in the day really, played out in Paychex stock. So, kind of a weak close here, not surprising. But when you switch to the weekly chart here, I just like the way this base is setting up here. The weekly chart always provides good perspective, so we'll see where the stock closes for the week. But right now, it's up near its weekly high, and you got that relative strength line that is shooting into new high ground. Not a super fast-growing company here, but you get a dividend yield of 2.3%, and you've got revenue growth accelerating in recent quarters. A lot of these companies talking about supply chain issues in their earnings reports. Paychex is in a business as an outsourcer where they're not going to have too many supply chain constraints. So stocks like this may be able to do well in a market that is trending lower at this point.
And as you pointed out, that relative strength line, important to note, because when the market is in a choppy or rough patch, we need to be focusing on stocks that are showing that relative outperformance. Those are often the ones that are off to the races when skies get a little clear.
So at this point, rather than buying stocks, people, I know a lot of IBD readers are just kind of getting their watch lists together, putting names like Paychex on there, looking at stocks whose relative strength lines are still near new high ground. And, we've got a couple of other software stocks we'll talk about today that are also showing uncanny strength in a weak market. So just keep track of stocks that are holding up well, that are sidestepping a lot of the selling. They're not buyable now because we're in market conditions that seem to be weakening on a daily basis. But here's Bill.com, which is acting very well.
Yes, another stock that is showing relative outperformance in the broad weakness, coming down to test its 10-week line. It's still down a little bit for the week, Ken, but as of now, showing support at that 10-week.
Yeah, down for the week, but up near its weekly high. So people who, when again on IBD Live, when we're going over the market, like to see, it's okay for a stock to close lower for the week. If this was a Friday and Bill.com closed just like this, yeah, it's a down week, but look at how the stock rallied off its lows and is up near its weekly high. So this is another test of the 10-week line that's going well. So a lot of times companies will go down when they announce a big share offering that raises dilution concerns. Bill.com had a share offering last week that they priced at $272, which is pretty close to where the stock is trading now. Sometimes you get these share offerings that are priced well below where a stock is trading, and the stock can sell off. But Bill.com has handled that news quite nicely. Really like the technical setup here, and you can see fund ownership has been increasing in recent quarters. But this is a stock that is owned by a lot of top performing growth funds. So that's we pay a lot of attention to sponsorship, and you can see in this MarketSmith chart, American Century Focus Fund. You got the Columbia Small Cap, a whole bunch of really top performing funds here that have a position. So I think Bill.com is a good one for the watch list.
It is. That is stacked. I think it's pretty rare you find that many IBD mutual fund index names in a stock. So worth watching as it sets up here.
Absolutely.
And MongoDB, MDB, another software name we are watching, Ken. And it looks like it's so strong that it hasn't even come down to its 10-week line this week. Still some 8% above the 10-week line, down a little bit for the week. But this is another stock that had a standout earnings report last quarter. Not profitable yet, but trying to get to profitability. But that top line growth, which is a very important metric as well, just very consistent in a strong way for MongoDB.
Yeah, well, constant repeated quarters of strong top line growth, strong sales growth eventually is going to make its way to the bottom line, and the company will be profitable. I think that's what the market is pricing in here. Several weeks ago, it staged a very bullish breakout when it reported earnings, and just like the way this one is holding above its 50-day moving average, and again, again, if market conditions continue to weaken, it's possible that MongoDB could come down. But it's traded so well since earnings. I wouldn't be surprised at all to see it find support at the 10-week moving average. So just like Bill.com, not a name that I'm just gonna run out and back the truck up and buy shares tomorrow, but I just like the way how it's been holding gains after this gap up, and I think it still has the potential to be a leader.
It does. All right, Ken. Well, we still have one day to go in this week. So what should investors be thinking about? What should the mindset and approach be headed into the final trading session of the week?
Yeah, I mean, listen, today was really kind of a mirror image of yesterday. I think the close was a little more harsh today, but remember the Nasdaq was up 9/10% yesterday. It faded all the way down to a 0.2% gain. So the Nasdaq has just given back gains for 3 straight sessions. Discipline is very important in a market like this. You shouldn't be buying stocks, so don't buy stocks, because if you do, weak market's eventually going to bring anything down with it. So, if you're buying stocks, even if they're small positions, you just run the risk of losing money. So just sit on your hands and keep the watch lists fresh. Look for signs of a bottom. Market still feels heavy. I mean, we still could be in the early stages of a pullback here, but again, if the Nasdaq eventually comes down to that 14,000 level, that might be enough to shake enough sellers out of this market, and could pave the way for some new bullish setups and new leadership.
We'll have to see. All right, Ken, thank you so much for your analysis, and thank you all for tuning in. We will be back tomorrow morning on IBD Live to break it all down. We have Brian Shannon of Alpha Trends joining us, so looking forward to getting his perspective on the state of things as well. So make sure you tune in, investors.com/IBD Live. We'll see you there in the morning, and we'll see you right back here tomorrow after the close.